Welcome to the ARMR Report. This is an in-game update. I'm Brett Rosenthal. Thanks for joining. The ARMR Investing Way. It's a three-stage process. We build our whiteboard. That's our fundamental research. We use our algorithms to determine risk on risk-off decisions, and we tie it all up with a bow of stop losses. That's the process. It's something I've been doing for a long time. I'm sharing with you how I run my own personal capital. So what we're going to go over today real quick is how we use spot gamma information to make money. Okay, we trade the indexes, both long and short, using spot gamma info as our places for entering trades and booking profits. And it works like a charm. We did it today twice. Started short, ended long. I'm going to walk you through those trades real quick so you can get an idea how to do it. And then we're going to shift into the big question of the day. The ARMR portfolios carry a lot of cash right now. The reason for that is we're risk monitor red, and we've been that way since the 10th of September. So it keeps me in a big cash position as I avoid the market sell-off. But there is a sector of the market where you're seeing a lot of money flow in and some big moves. And they're almost all commodities. Not all, but almost all. We see the energy stocks blowing out. We see uranium stocks taking off. Okay, so we're going to talk about and highlight charts of other commodities that are breaking out. And so while we may be risk monitor red, which calls for a lot of cash when it comes to big index type of stocks and your typical growth stocks, we may see an opportunity to create alpha by building a part of our portfolio into the commodity space. And the question is this the start of the commodity super cycle? That's the question. We're going to try to answer it. So you can always subscribe right here to the ARMR Report. You can subscribe to this YouTube channel if you want to know what we're doing. Feel free to hit that like button if you enjoy this conversation. And if you would like a free copy of the ARMR Report, we send it out periodically during the week when there's something important to relay to you. And you could just send it to us right there, info@thearmrreport.com, or click on the button right here and sign up for the free email. All right. Having said all that, let's dive right in first to trading the indexes using spot gamma information. Okay. So what you're looking at here are 3-minute bar charts of the indexes: S&P, Nasdaq 100, small cap index, Dow, and then of course we watch VIX to help us make those trades. Okay. So we'll be willing to go long or short the indexes based on our triggers. So what I like to say is spot gamma information is like the rocket fuel. And the rocket is your, or in this case, our trading strategy, our triggers, the algorithms we use, right? So we have algorithms we use on an intraday basis to show us when to put a trade on. And then we look at the spot gamma locations to add nitro to that gas tank, right? And so this is what we do. Step one, in case you're new to this process, is setting up your charts, your intraday charts for 3-minute bars. Okay. I usually keep that a secret because most people use a minute or 5 minutes or 15 or 10 minutes. And what I've found is 3 minutes is most effective. I don't like to talk about that much because I think eventually if everyone starts using 3 minutes, it won't be effective anymore and we'll have to find something else. But we'll see what happens, right? So 3 minutes. Obviously, when you look at these charts, the red bars are down bars, the blue bars are up bars, and then the yellow or black bars, okay, are algorithmic paint bars, right? So we've written in a bit of code to tell us when a specific trigger has occurred, and then we get a color code that shows up. Okay. So let's start with our short trade this morning. Let's look at the Nasdaq 100. So one more thing before we go and discuss this. So what I like to do is use the triple ETFs for intraday trades. So if I'm talking about the triple Qs, going short the Qs, I'm actually going long SQQQ. All right. If I'm going long the S&P, I'm going long SPXL. These are just triple the indexes to give the trade more juice. You can easily take this information and use options if you wish. You could just trade the underlying. You could do whatever you want. I'm just sharing with you what I do. Okay. It's all basically the same thing. It's just what makes you most comfortable: trading the option, literally borrowing and shorting the index, or just trading the triples. It's however you wish. Okay. So Nasdaq 100, here's the trade. I'm going to blow this up for you so you can see it. All right, so you can see the lines of demarcation. This is today's trading action. This is yesterday's. Always important to see yesterday's. So what we saw this morning on the gap up in the open, right? Gap ups during as Spot Gamma would say, a negative gamma market. Gap ups are a place to look to short. Gap downs, I might look to get long, but a gap up, we look to short. So we saw the gap up right up to this green line. Now, all the lines on this chart are an ARMR algorithm we call the ARMR Price Movement Profiler, the PMP. Each line, starting with this green and this red right here, are the opening ranges. Okay, the middle line is right there, that yellow dash. And then every green above is a Fibonacci extension, below is a Fibonacci extension. The light blue lines are average true ranges. And what we do is we infuse a volatility component into all of the off-the-shelf products. So we take the off-the-shelf ATR calculation, and then we modify it to create our own proprietary algo for ATRs. Okay. The black line is a volume weighted average price, these dots, the VWAP. And again, I call it the ARMR VWAP because it incorporates top day and multi-day volatility. It's not a basic VWAP. And then standard deviations above and below that range, okay? The purple dash right here is the spot gamma line. So this is one important spot gamma line right here. So coming into today, the first piece of information we get from spot gamma that's important is that all the gamma lines but this one are off the screen. That's indicative of a negative gamma market. So we're looking for lots of volatility coming into the day on the indexes. So gap up, our trigger was to get short on a move below the VWAP. So on this bar right below the VWAP right here, I can blow it up a little bit more. Right below the VWAP, we get short, comes right down to prior day's VWAP, and we start booking our profits, okay? And what we do here is, we book some profits here, and then on the double bottom, we book the rest of our gains. Okay, so that trade was over pretty quick, nice little tidy profit. Now let's scooch over here. While we were doing that, we also put a short position on the small cap index. Okay, so we usually go long the S&P, but we short the Nasdaq and the small cap. Same scenario, except for a much nicer return. Small gap up on the small cap index, but the beautiful trigger bar is the break not only below VWAP, which is this black dot, but look at that clear gamma violation. This purple line right here, right? This purple dash line right here is the gamma location this morning that it crushed through. At the same time it was taking out the VWAP, we get short. And oh my goodness, this was just one of those great days where the spot gamma information is spot on. We put the trade on here. That's our job, is to find the right trigger as it goes below spot gamma location. And then we cover when it hits the spot gamma location, right? We start covering the position here, and then however you want to get out of the rest of the trades, up to you. But you always book some profit on a short trade or a long trade right at the gamma levels. They work so well. And you can see now the market's just been pinned right to the gamma level the rest of the day. Okay, so those were our two short trades this morning. And because we were in a negative gamma situation, we usually look for 2 scalping trades a day. There'll be a short trade in the morning and then long in the afternoon, or a long one in the morning and a short in the afternoon. So once we had those 2 short profits under our belt, we start looking long. And this is the S&P trade. And here's where the ARMR algorithm is really set up. There's nothing here on the chart from spot gamma that's really going to help us on the S&P trade this morning, because it didn't quite get down to this level right in here where we would have loved to have seen a reversal. and we're not anywhere near the the top of the top gamma line up here. So we had to use obviously our own techniques, and in this case, what we love to do, and ARMR insiders know we've posted on the ARMR education page in our Slack room, step-by-step process on how to scalp the indexes. But here it is. We look for, this is one of the 4 setups we look for. We look for a double bottom over an hour-long period with these yellow algo paint bar studies showing up, okay? So what we saw here was a bottom at 10:30. Oh my God, I love the 10:30 and 11:30 trigger. It's one of my favorites because you're not only getting a VWAP trade, but you're getting a time-weighted average price trade. There's a TWAP going off. It starts buying at 10:30. It comes in again at 11:30 at a higher price, okay? And so there's your trigger bar right there. And we're getting long SPLX for the run all the way up to here, okay? So we booked some profits at the high of the day. And then, of course, we had the Fed minutes come out, spike higher, reverse lower. That takes us out of the trade completely, and we've booked our profits. So those are the 3 trades that we executed on our live trading desk. So the ARMR Pro live trading desk, I share the screen in the morning and we look for these trades, and you can watch me trade as I do it. And hopefully over time, you learn how to do it on your own. That's the purpose, like really, of the ARMR report. I share with you my process. Then you have to decide your own risk tolerances, your own goals, and figure out how to use the information to make you a better steward of your capital. The ARMR report, it stands for Algorithmic Risk Management Research, and I consider it ARMR for the portfolio. So what we have now is a risk monitor red signal. We have a lot of cash, and so we look to use that cash to scalp the market, either long or short, until we get the next risk on green. And even then, we'll probably keep scalping. But once you get risk monitor green and you go into a grind higher market, the volatility compresses. And so there's not these types of opportunities every day in the indexes, and we focus more on individual stocks. So let's get into that. Let's start talking about focusing on individual stocks for a second. Commodity super cycle. I generally avoid the market when it's risk monitor red. It typically, when the market starts selling off, they typically will get to a point where they implode to such a degree it drags everything down. So I hesitate to come on here today and say, hey, let's all start buying commodity stocks, because if the sell-off gets bad enough, they're all going down. Period. That's how it works. But if we're in a market that's able to digest the Fed reducing liquidity and raising interest rates, and instead of just outright collapsing, it rotates into the area of the market that best expresses the reason why the Fed in the minutes today feels like they have to talk about tapering and raising rates. Okay? The biggest comments from the Fed minutes were they may start tapering November, which I think we already knew, and they may start raising interest rates next year, which I'm not exactly sure we all knew that. I know there's been talk about when that's going to be, but now it's written in the minutes, right? So the reason the Fed's doing this is that you're starting to see them make comments that instead of inflation's transitory, people are starting to realize, and so is the Fed, people at the Fed are realizing that maybe inflation's not transitory. And if that's the case, they got a problem on their hands. Right? And so if that view expresses itself in the market, what we're going to see is dramatic alpha opportunities in inflation hedges, which are commodities. Okay? So let's go look at the number one group that should benefit from that. It hasn't yet, okay? But historically, this group should be a big winner. You all know what I'm about to say. Okay, here's GDX. So we're looking at GDX, we're looking at the gold stocks, and maybe we should start with Sprott Physical Gold. You can look at any gold you want to. My favorite, Sprott Physical Gold. Okay, if I'm going to own gold, I'm going to own Sprott Physical Gold. I'm not going to go over the reasons why Sprott is better than GLD. Hopefully you all already know that. If you don't, you can feel free to email me or contact us at the ARMR Report. I'll be happy to walk you through it. But anyway, suffice it to say, there's the double bottom on spot physical gold. And today's the day that we would like to see it close above the 50-day moving average, but certainly close above the high of that down bar right there, okay? If we could take that out, then what we're doing is making higher lows on a short-term basis and a double bottom on a long-term basis, and we're breaking the downtrend, okay? And so what we would say is there's an entry point using ARMR algorithms right there. We'll probably get a risk-on entry point on the algorithms, right? And the stop would be a low right here. So I always like to set up these positions, and particularly with risk monitor red, we will be using tight stops. Because like I said a minute ago, if the market gets ugly enough, it's all going down. I mean, February, March of last year, gold got destroyed like every other asset during the pandemic, okay? So that's simply because everyone panics and dumps everything in the portfolio, even the best names. But let's pretend that's not the scenario we're in right now. Let's just say the market's going to rotate into commodity stocks. So step one, gold, if that's true, if the thesis is true that money is going to rotate to commodity stocks, then gold and silver have to respond. So today would be day one, and we would see if that works. PSLV is spot physical silver. It hasn't even started yet. I mean, that's broken down out of a pennant. So that looks kind of terrible. And I wonder if that's not even a pennant. I mean, maybe what we're looking at is something like this. We'll just have some fun drawing. I mean, at the end of the day, technical analysis is a bit of an art, not a science, right? Whoops. So I think it's fair to say we're at the bottom of a rectangle. Something like this. All right. And if we were to do a parallel line, and we draw it up to the tops here, that's kind of what we're looking at more than anything else. We're at the bottom of a rectangle. So I love to put on a trade where the reward is worth the risk when probabilities are at their highest. So right now, reward's definitely worth the risk. What's the risk? It breaks down below this trend line right here, this support. If it takes out that support, the trade's over. So we're looking at something like 7 3/4 is your stop, right? And the stock is trading at what's the stock trading at right now? Somewhere around, $8. Okay, 25 cents on the trade. I'll take it, because if this downtrend is broken and silver starts to go, it's got such upside, it's unreal. So the reward's worth the risk. And if we get a risk on entry point with the ARMR algorithm, then there's your probability matrix has just said to you, okay, probabilities are high, the asset's going up, and the reward's worth the risk. You put that trade on. If you want to do that and get a little more aggressive, you look at the silver mining stocks, right? These are the silver juniors. And you can see they're breaking the downtrend, and it's the same type of a pattern, okay? So today's day one of the move. If it reverses, if I add this today and it takes out the low of today, I'll be out of the silver miners. Okay, so tight stops when it's risk monitor red, but it doesn't mean we can't take our shots down the field when we see an opportunity. And it looks like that opportunity is showing up in commodities. Now let's skip over to energy. Energy's been leading the charge. I'm not telling you I'm buying energy today. I'm not. Okay, this is like a loss leader for me. The time to buy energy was right in here. I looked right at it. I said, I'm not doing this right now. And the thing broke out. Well, that's okay. It's leading the commodity space. And I'm going to get my opportunities on the way up in energy. I'm going to wait for pullbacks, and I'm going to add energy to the portfolio. Something for you all to remember. At the height of the energy booms, you're going to see energy somewhere north of 20% of the S&P from a market cap standpoint. Right now, it's like 2.5%. I mean, nobody cares. So this first little move off the bottom is nothing. Patience, pulls back, find an entry point. If we have a commodity super cycle unfolding, the upside in energy is enormous, okay? So XOP, XLE, not something for me to add today, but I'm just sharing with you, is the thesis that we're at the beginning of a commodity super cycle true? Well, you're going to have energy breaking out. I don't care what the Greenpeace people say. I don't care what people in Congress say about, solar energy. I mean, that's all great, and uranium is going to be fantastic, but it takes a lot of time to build out that infrastructure. And between now and then, and the massive demand for energy coming out of Asia, you got a shortage of black gold. That's what's going on. And so in the commodity super cycle, I expect these things to really run. Let's move on. Just looking at charts to see, is there a commodity super cycle unfolding, right? I'm not going to get too deep into your uranium, but you see what's going on here. All right, uranium's going through the roof. So things that are energy related. The ETF TAN, just as an example, solar energy is starting to come on now, okay? I've got 4 names that I like the most that I want to own inside of TAN. I'm not a buyer of TAN, but I'm just showing you there's a double bottom in the solar stocks, and they're starting to break out. These are commodity-related assets. Let's keep going on. How about lumber? Louisiana Pacific is breaking out. So huge run in lumber, nice pullback from May, 1, 2, 3, 4, 5, almost 6 months of selling off and pulling back, breaking out of a beautiful base today. Lumber prices are starting to move. Boise Cascade, BCC, same chart pattern. Chart looks phenomenal. Right? So what we like to find at the ARMR report is strength, and we buy weakness in the midst of strength. So here's the strength, the big long-term trend is up. Then you get a 5-month pullback right to the 200-day moving average. That's where you put the trade on. Don't believe me? Take a look at, energy, right? So you had the big run off the low. Then it took the same almost 5-6 months to build a double bottom base at the 200-day. That was your entry point. Now it's moving higher. So it's the same type of pattern here, right? Big run, pull back, consolidate. Now lumber prices start moving again. And let's round it out by looking at copper, okay? FCX is my favorite way to express my opinion that copper prices are going higher. Huge run in FCX. Nice pullback over the last 5-6 months. Coming above the moving averages right here. How do I trade this? If I put the trade on here and it goes below the low of today and back below the 50-day moving average, I'm out. So my risk is limited. But if this copper move reignites, there's a big move coming in FCX. You guys can always do COPX. Got to do your own homework here. This is an ETF of all copper stocks all over the world. I personally would, rather do FCX, but it's the same. It's 6 of one, half a dozen of another. This is a good looking chart, and it's a way to capture copper mines all over the world. Okay, and maybe limit some of your risk to Indonesia in case something goes wrong with Indonesian mines at Freeport-McMoRan. So there's 2 different ways to play that. The only downside here is there's a lot of assets that are tied up in China, and we don't know what China is going to do next. They come out and announce that they're nationalizing the copper mines. It'll be death for this thing, and it'll skyrocket FCX. So you have to make your own choices there. So those are my thoughts for today. I just wanted to share with you where my head is. It's possible a commodity super cycle is unfolding. ARMR Insiders, what I'm going to do once this call is over, we're coming up on 3:30. At 3:45, I update the ARMR portfolios in our Slack room so you can see what I'm adding to the portfolio and at what percentage. And there's going to be some combination of the names I've discussed today. I don't know which ones yet I'm going to do and how big I'm going to do them. But depending on how these things are closing and how the market's closing too. So what that means is, let's say the market's just imploding in the last half hour like it's been doing almost every day. Who knows? I may wait till tomorrow morning to put those trades on. But I'll update the spreadsheet before the end of the day so you guys can see it. By 3:45, I'll let you know. I have some time for a couple of questions if there's anybody's got a question out there. Question looks like it's coming through SOXL. SOXL. 3 times semis. Yeah, that's a good way you can trade that too. So Nothing wrong with that. I mean, I like to stick to the indexes. When I'm scalping, I like to scalp the indexes, and my goal is to put on big positions. At one point, I had almost 100% exposure to the S&P through this asset for my entire portfolio, and then just day traded that. So I take big positions on indexes. I'm most comfortable doing that. It's very liquid. It's easy to get in and out. That's what I do. But everything I talk about at the ARMR report, it's your job to take it and make it your own. Do your own research, figure out your own risk tolerances, figure out things that work for you, and use the ARMR report as a guide. I appreciate your time with me. As always, at 11:30 on Saturdays, we do our weekend review, and we spend more time with Q&A. So I'm happy to do that. And in the meantime, I hope you guys have a great afternoon. Be safe out there. Make sure you're protecting capital first and then capturing upside. That's the big difference between what we're doing here at the ARMR report and most of the conversations you probably hear. It's about protecting the assets you've built and then capturing upside when windows open. It's possible the commodity window is opening, and we're going to jump through it. I'll see you guys next time. Take care.